All right, this way it goes live right when we start. So, all right, I think it's just loading up right now. Bear with me. And while we are waiting, I just want to remind you there's a questions box. You'll find the icon on your Zoom dashboard. All right, this way it goes live. Okay, good. We're all set to go. And please use the questions box. All right, here's your opportunity to ask some questions and put your comments in, whatever. Hopefully, we can get to all your questions here tonight. What else I want to tell you here? Yeah, sometimes I do speak a little bit too fast. If you do find that's the case, just let me know and I'll certainly slow down a bit. And if you are new to options trading, don't worry if we get into anything technical that you're not going to understand. Not a big deal here tonight, okay? Not a big deal. So you're not going to miss anything. So, all right, let's get started. And I think there's a record button here somewhere too. And this is actually going to be recorded. So if you do feel the need to go watch the Academy Awards, go for it. You can catch the recording later. Not a problem. Here we go. Okay, good evening again, everybody. Welcome to DayTradeSPY.com's Weekend Review, Intro to Trading. And my name is Hugh. It is Sunday, March the 2nd, 2025. And again, my name is Hugh. And we're doing this, excuse me, solo here today. My buddy John, he's off today because he's going to be doing the Wednesday night session. So we're just kind of spreading the workload out a little bit here. And use the questions box. You'll find the little icon on your Zoom dashboard. Just click on that. I'm the only one that sees any of those questions or comments that are going to be coming in. So, all right, by attending this webinar, actually, I'm going to let you read this, folks. Give you a couple of seconds here so I don't bore you with my voice. And just take 10 seconds and read this. This is the standard disclaimer. All right, and you alone responsible for your own trading and past performance does not guarantee future results. I think you know that. All right, so there you are. And let me see if I can show my video there. Okay, do I have a screen here somewhere? Okay, actually, I have one more thing to do. Bear with me. I have one more thing to do here, which I neglected to do. And I just have to, where did it go? Where did it go? Well, that's okay. That's okay. I'll pick this up here. Actually, I just need to bear with me for a second here. All right, it's not coming up. That's okay. Oh, here it is. Here it is. Here it is. I got it. Okay. Oh, well, you know what? I'm not gonna waste any more time with this. I gotta just register and join. Open. Just hang on a minute here, folks. Okay. To do this here. No, I have to mute this. There's the mute. Okay, and I have to do this. Hang on, hang on. Okay, there. I think we're good to go, right? Yeah, all right, there we go. We're good to go. All right, there. Okay. So what I do is I have my cell phone and I have it coming in on my cell phone and I put up by my camera so I can look at the camera and not always keep looking away. This way I can look at you. I know there's some convoluted technical stuff in there, but anyway, here's what we're going to talk about here tonight, folks. All right, tonight we're going to discuss last week. We're going to talk about last week in review. The upcoming week, going to give you a little bit of a 2-minute tutorial and take your questions. If you have any questions, please put them in the questions box. Hope to get them all in there. All right, so so who am I? Why should you listen to me anyway? You don't have to listen to me, you know. What do I know? I never spend any time on the trading floor. I say that because I remember going to some of these uh, these sessions, you know, not webinars, but they're seminars, and they bring up some guy say, "Well, I was on the trade floor, and well, what did you do? Deliver the coffee?" You know. And I found I didn't learn a whole lot from those guys. I did. That's not a lie. I did spend a little time in the Chicago Board of Exchange there in the gallery for about an hour, just watching all the action on the trade floor. And I never learned too much from that anyway. But what I learned, folks, I learned from the trenches, deep down in the trenches trading. That's really where you learn, right? And think of it as like an apprentice. I never thought that I'd ever be doing this back in the days when I learned how to do this. I had to learn how to do it because not only was my own retirement at stake, but my kids' education fund. When you bring that into the mix, you have to ask yourself, okay, you know, this is serious. This is serious, and if I don't learn this, and if I just leave this up to my own financial advisor, he's going to blow out half my account. He already did. The other half is set to go. So if I don't learn how to do this, this is going to be bad news. So I learned how to do this. Spent my early years deep in the trenches trading, and that's what happened. So I started trading and making some money, some pretty good money on the market. Had some really good trades, and then I started my fortunes reversed. Things weren't always good for me. All right, things started to go very, very well for me after I started making some serious money on the market. That's when people started noticing, and they coerced me into teaching them what to do, and that's exactly what I've done. So I've been now trading for many years. I've been teaching people internationally since 2010. We're in our 15th year, and I don't know of too many services that have been around that long. None that I know of that teach that have a trading room on a regular basis that went the whole 15 years. So I was talking about this with somebody the other day. And they said, well, they tend to get bored, or they cut out, or they get burned out, or something. But we have a pretty cool system. See, we don't go from 9 to 4 every day. That's a real job. We don't want a real job. We just want sort of a part-time morning thing, right? We just get together in the morning and you can kind of handle that. So that means you can go by pacing yourself, like you can go longer periods. So anyway, doesn't matter. Folks, we are the real deal. All right, you got to trust us on this one. If you don't like it, you can get your money back. Who else does that? Any of our services? You don't like what you see in a month? Just call them up. Say, hey, buddy, I don't like what I see. It's not for me, whatever. Give me my money back, and they do. That's the beauty of Eagle. Anyway, I look for short-term breakout trades. All right. I don't do any spreads, no naked positions, none of that stuff. And if you don't know what I'm talking about, don't worry about it. Just know that I aim to make a little bit of money every day. Just keep stacking the money, and then eventually you get a lot of money, right? That's kind of the way it works. So, folks, I want to tell you too a little bit about our Spy in the Market newsletter. It goes out every week, every Thursday. Excuse me, I write this thing every Thursday, and it's a very short, brief 3-minute read, light, relevant, entertaining. All you have to do to subscribe, just go to the website, daytradespy.com. And when the little pop-up comes up after a few seconds, just leave your email address, and that will subscribe you automatically to Spy on the Market. Okay, daytradespy.com. This week's topic: call to action in uncertain times. Call to action in uncertain times. And let's move along here. So, what are we doing here? This is what happened last week. Just going to bring this up here. Last week, what happened? Well, on Monday we had a low no news day, but President Trump, his tariff speak started at 249, damped SPY a little bit there, brought down the market to test 597. Uh, he speaks when he wants, right? He doesn't keep a schedule. The schedule follows him, right? So. Oh my goodness. And then on Tuesday, we had lower than forecast consumer confidence with a higher than expected Richmond Manufacturing Index. This pushed SPY down originally, all right? And we tested some low numbers there, way down around 590. And then the buyers came back in. They saw an opportunity. They started buying. They pushed it back up, and the bulls grabbed hold of it, took it back up to around 594-ish, maybe a little bit higher. On Wednesday, we had some bullish buying, and what happened there was we also had lower than forecast new home sales, which was anti-inflationary that pushed markets higher. Okay, and it's all about inflation rates and inflation, right? It's always about that. So we pushed SPY higher, and then resistance kicked in, pushed SPY down at 599, kicked it over the edge. That was on Wednesday. Thursday, we had some higher than forecast unemployment claims, but it could not buoy SPY enough to overcome negative durable goods orders. All right, and that was enough. We had some tariff threats, and if I spell that correctly, all the better. Let's do this again. Tariff threats sent SPY down to the 585 level, even lower. All right. So talk about this tariff situation and around the world, globally, China, Canada, Mexico. Threats, tariffs all over the place. We are going to reposition this whole the economy with tariffs, and everybody is going to be tariffed. So that's and that of course screams inflation. That screams inflation. On Friday, we had the personal consumption expenditures report that came in as expected, and it knocked down by higher than expected Chicago PMI report later on in the morning there. But Trump encouraged SPY to close higher as we wrapped up the day, week, and the month, went back up to 594. So the situation, I believe, with this tariffs is that it's really a negotiating tool. And one thing about Trump, and I don't know if you've noticed this, but he's very impulsive, I guess is the word, impulsive. He has an idea and he says, "Oh, I like this. I'm going to implement it." And unfortunately, he has the power to do so, or maybe fortunately, I don't know. But here's the thing: I believe that when he sees if and when the situation worsens in the economy, I believe that he's going to change things pretty quickly. So, how long these tariffs are going to be in effect for, or under what what condition, what circumstance, or how they're going to play out, I think that is to be seen. The economies of the world are very interwoven. Things are not as simple as as sometimes I believe this is my opinion, as sometimes he sees it. He would like to see things very simple, and maybe in some ways they are, but in reality, there's a lot of interwovenness in the economy. There are parts of computer chips that are made around the world, and they go back and forth. Well, let's look at cars, vehicles. Detroit is very concerned about these tariffs from Canada because they also make cars and car parts in Canada. And a vehicle can go back and forth the border anywhere from 6 to 10, 12 times before that part is actually installed in the vehicle that is sold here in the United States. So what are you going to do? You're going to tariff 25% every time this car crosses the border here. And then Canada's going to retaliate with tariffs on the other side, going, what, 25%? Are they going to do that too? So what? If this thing goes back, so what does that mean? A car that might have cost $40,000 is not going to be $300,000 or something? I don't know. So obviously that's not going to work, right? And there's a lot of things that way. A lot of potash comes from Canada, it's a fertilizer. So the whole agriculture industry is up in arms. Well, hang on a second here, right? You can't tariff that. It's going to destroy your agriculture. So anyway, I think it's going to be probably a very short-lived kind of a thing, but it's going to create some havoc in the economy and in different sectors. So, but we're going to see what happens, see how it plays out, and no doubt it's going to settle in somewhere. So, but right now the market is feeling a little edgy on that, and we had downturns pretty well 4 days here out of the five in last week, and then on Friday it pushed back to the upside. Let's take a look at the seasonal standpoint here. That blue line up at the top is actually where SPY is now, and the red line at the bottom is the composite of the last 5 years closing price on the daily charts. Okay, so what we're seeing here is if I stretch it out and zero in, historically SPY dropped 4 points from last week, and it dropped 2 points going into the following week. So even though the market came down last week, we're kind of in line with the historical chart patterns, the seasonal patterns. So we should not be overly surprised. And I brought this up last week too, and the week before. No, I think the week before we weren't here. That's what it was. But last week we talked about this too. So we'll see what happens in the coming week. Coming week could be some volatility kicking in. We did go up before we came down. Okay. We did move up, and a couple days before we did come down. So we're going to wait and see what happens. All right. All right. So last week, what happened? Excuse me. Stocks erased year-to-date gains. Let me fix this up here. I thought we checked this already. The stocks erased year-to-date gains, but still remain 15% higher than they were a year ago. All right. The S&P 500 briefly dropped 4.5% off its all-time high. That was on February the 19th, and then it pushed back up a little bit here. Growth concerns, trade uncertainty, deteriorating consumer confidence. This all added to volatility. and volatility could stay elevated still, but economic expansion and the bull market still are intact. All right, so we're not, the market may have come down, but nothing to fear yet. It's not like a change in an overall trend or we're heading into some recession. That's not it at all. All right, we still have positive growth. We still have a steady labor market, rising corporate profits. There's a lot of still AI spending. Microsoft announced they're spending a fortune in data centers. So there's a lot of movement around, and we still have a dovish Fed Reserve. They're not talking about raising interest rates, nothing like that. We still have something like a 97.5% chance of a zero interest rate cut, and maybe a 2.5% chance of a 25% basis point rate cut at the next Fed meeting coming up later this month. So they're still in that dovish mode, okay? But of course, they're going to wait and see what happens. They're not committed to that. They're going to wait and see what happens to the economy and obviously react accordingly. So, diversification, this is the key here. Leadership broadened, but rotated away from the large caps and the tech stocks. In other words, the Magnificent Seven is no longer leading quite as much as they are. There's a lot of attention now given to these, the smaller capitalized stocks. So things are moving in a different direction. Last week, the S&P did drop by a percentage point. Year to date, we're still up 1.2%. The Dow actually rose a point last week. They're up 3%. The Nasdaq is down year to date 2.4%. Again, that's the tech heavy stocks, right? All the Magnificent Seven stocks. Magnificent Seven, that's the top seven stocks. And let me just see what they are because I know somebody's going to ask them. What are the Mag 7 stocks? I used to call them FANG and stuff. Let's see. What are Mag 7 stocks? They are. Da, 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 da. Okay. They are. Let me see. Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, right? Two, four, six, seven. Alphabet, which is Google. Amazon, Apple, Meta, which is, well, Facebook, Instagram, and who knows what else. Microsoft, Nvidia, and Tesla. These are the magnificent, and these are overvalued. These are very overvalued stocks. So whenever something really shocks the market, these are the first stocks to really feel it. And you'll see these stocks going down and more money flowing into the safe havens like gold. And these are the stocks that are going to be primarily on the Nasdaq, right? So that's why I don't do the Nasdaq because look at this. If I trade the Nasdaq, it's actually down 3.5% last week, minus 2.4% year to date. Whereas with the S&P, it's a little more balanced, a little more balanced, even though they still affect the market, but not quite as badly. So. All right, I'm going to take a little poll here, folks, just to get a little bit of interactivity here. I want to know what your thoughts are. President Trump recently said that Ukraine started the war. Kind of a news shock to me, but who do you think started the war? Russia claims it started in says that Ukraine started in 2022 with a full-scale invasion. Ukraine says it was in they said that Ukraine started the war back in 2014, as Putin claims. So who started the war? What is your opinion on this? Russia, just 3 years ago, or Ukraine back in 2014? Or if you're not sure, let us know. Just curious, trying to get just a general. The poll means nothing. It's not, you're not going to be on some kind of a crazy mailing list or anything like that. And I'm just really curious as to, what did I miss? If I remember correctly, wasn't that Russia that kind of walked into Ukraine 3 years ago? Did I miss something? Was there something that happened in 2014 that I kind of forgot about? I don't know. I mean, I lived through it, but I don't recall any major thing here. So, and I'm just gonna kind of while your guys putting the answers in, I want to take a look and see what your comments here. Yeah, I'm thinking that too. I like Brian's answer here. He says Joe Biden and Barack started the war. He did not prevent it. Um, well, I don't know. Is it up to the U.S. to prevent wars? I don't know. Oh, there's one Ukraine. Okay, Russia, not sure. Maybe Russia. A lot of Russia. Everybody says Russia. Most people will say Russia. Larry says Obama. Okay. Uh, Ukraine should be unanimous. Really interesting. Oh yeah. Okay, John says Russia, not okay. Russia. Yeah, I'm sure it was Russia. I know it was Russia. Okay. All right. Venkat says, there's no relevance to the war of spy trade. Venkat, hey, listen, we're talking about all kinds of funny things here. We're talking about different things. We're talking about different things. It's kind of laid back. This is a laid back Sunday night session. We're kind of pretend you're sitting in my living room, got the fire going and some hot chocolate or whatever drink, maybe a little glass of vino or something, Russia, Putin started. Yeah, yeah, I'm sure. So I don't know what happened. I don't know what happened, before in 24, and if there was something that happened in 2014, you know what? Why didn't you resolve it then? What are you waiting 8 years, right? So anyway. All right, overwhelmingly goes to Russia on that one. All right, next up, the week ahead. Monday, we have the ISM Institute for Supply Management and the S&P Global Manufacturing PMI reports coming out. Not too much on Tuesday. Wednesday, we've got the ADP non-farm employment change. And ISM S&P Global Services PMI reports. Thursday, unemployment claims. And on Friday, we have employment rate, average hourly earnings, Fed Chair Powell speaks. Also, Monday night, I should put in here. Now, this is going to be Monday evening. State of the Union address. State of the Union address, but it's not officially called that. It's not officially called that, but we're just going to have to change this and call it Trump speak, okay? And I am going to change this because unofficially that's what it is, but officially it is not. It is not that. We're just going to call this Trump speaks. Trump speaks, okay? Okay, let me just do this here. Clear that off. Okay. So Trump is going to be, I believe, addressing Congress on Monday night. So we're going to see what happens. That is going to have an effect. That's going to have an effect on the market on Tuesday. So I can't really say yet whether volatility is going to be low or no Newsday on Tuesday, but Monday night we've got Trump speaking, and I'm sure a lot of people are going to be watching what he says. So, what happens to volatility in this whole thing? Well, Monday I've got it set at medium. Assuming there's going to be nothing major in the Trump speak right now, according to the news that is going to be released, it's going to be just low volatility on Tuesday, medium on Wednesday, Thursday, and Friday. Consider volatility to be high, and also whenever Trump speaks, volatility is elevated. So these days he's been speaking not quite every day, um, but every he seems to be speaking a lot. And in the mornings we get the report that okay, Trump's going to be speaking today in this latest executive orders. So whenever that happens, you can expect volatility to increase, to be elevated. So we're going to wait and see what happens here. All right, so just kind of count on that for the week coming up. All right. Kind of moving ahead here quickly because I know some questions I want to answer. And I don't want to stay here all night, and I know a lot of people want to go back and watch I think it's the Academy Awards here tonight. Anyway, we're here for you folks. So, we're not going anywhere, but let me take a look here. All right, 2-minute tutorial today. Open interest versus volume. What are these all about anyway? Open interest versus volume. Well, they both describe liquidity and activity of options. So it's important to have a lot of options being traded for liquidity. And this is one of the reasons I don't just jump in on some of these other companies out there. There's nothing worse than buying an option, even though there are options available, but you buy something that's not really trading a lot. You're not going to get the volatility, you're not going to get your price. When you have low volume, low open interest, low volume is really what it is. You're going to have wider bid-ask spreads, right? And so you don't want something with low volume. It's not going to do you any favors. All right. So, all right. Okay. Right. Yeah. I'm just kind of going back, seeing some of the comments here. Okay. Yeah, I think this war is more complicated than we see. I don't know. Anyway, but it's just interesting how that. Did you guys watch that thing, that interaction between Zelensky and Trump? I was like, holy jeez, what's going on here? And did you see the Ukrainian ambassador, the lady there? She goes like this. She puts her head down. Oh my gosh, you just see what she's thinking. This is going from bad to worse real fast. Anyway, getting back to our 2-minute tutorial. Um, we have volume. Now, volume refers to the number of trades as a measure of strength and interest in a particular trade. So when you see volume kicking in on an option that's moving up, and I like to trade something with high volume, and I generally like to wait until there's like a lot of options, or at least it's going to be looking like a lot of options. And I find that for the most part, most of the volume is going to be at the money options. All right, sometimes a little bit out of the money, and that's okay. And sometimes I'll go with the out of the money options, but I like the at the money options. That's where you get a lot of volume, a lot of heavy trading. Now, I know that most of the volume trade is going to be at the zero date expiration, but now you've got something else working against you with those zero date expiration trades. All right, time. Time is not on your side on those guys. They are high risk trades. Yes, you've got amazing liquidity. And that tells me when I see the volume on those zero date expiration trades, I'm thinking here, okay, so most of you options traders at this level here, the zero date expiration, you guys are gamblers and you're certainly hoping for the best. But I'll tell you, you get a bad trade on those zero date expirations and it can wipe you out real fast. So that is why I always advocate buying time. That's volume. Now, open interest reflects the number of contracts in active positions. So they're open, right? They're waiting for buyers, sellers, they're waiting for settlement. And that is updated in the morning. So you're going to see that in the morning. So that's why I don't have it on my screen. I look at that early in the morning, but I don't actually have it on my trading screen because it's not really relevant. I know when I see what the number is in pre-market and whatever that number is, that does not change throughout the day. All right. The volume, the open interest is just as a static number, and they don't update that. The volume reflects the running total throughout the day. The volume changes, open interest does not change. And traders use these changes in these metrics to gauge market liquidity. Again, the more volume you have in a trade, the more liquid it is. That's what I'm looking to trade. Open interest tells you where the action is. Now, that's good if you are looking at further out on, say, out of the money options. And sometimes we do this where we think that, okay, longer term, maybe the stock is going to go up or down or whatever. We kind of want to see, well, where's the party at? And it might be and I find that the open interest a lot of times is going to be at certain key strike prices, like the $5 strike prices that end in $5 or zero. So that you'll find that that's where a lot of the open interest is. That's where a lot of options are already trading. So you kind of want to maybe zero in on those. But during the day, the important thing here is going to be your volume. Make sure that you're always trading with lots and lots of volume. Generally, I don't like to trade anything less than 1,000 contracts being traded. Okay. All right. Now we're going to flip over into this thing, the 5 to 50K by year. So I'm going to tell you a little bit about this. We do this in the trading room, folks. This is something we do in the trading room. All right. And this started actually early this year. At the beginning of the year, I started working with a gentleman. And he said to me, Hugh, I've got $5,000. I mean, I could trade as many times during the day as I want. I've got lots of money in my account, but is it possible to take $5,000 and turn it into $50,000 in 1 year? And his name is John, but not the John that's in our trading room, but this is another gentleman. I said, absolutely it is. In fact, probably a lot more than 50,000. So I said, okay, let's work together on this, and we are. And I said, okay, first of all, we are going to put in some rules, assumptions, guidelines, right? You kind of have to follow some sort of a policy here. You're not just going to willy-nilly get into these trades, although we are open to changing the rules as they develop. So, rule number one, not inhibited by the pattern day trade rules. You can trade multiple times a day if you want. Okay. Now, I do try and keep it down for the sake and for the benefit of those who may be affected by pattern day trade rules. Or, we certainly try and just get maybe one trade a day in there. Sometimes I'll do two, maybe even three. But generally, I'm looking at just one trade a day. The pattern day trade rule, for those who are not familiar with that, is says basically you are allowed three round trip trades in and out, in and out, in and out in a 5 day period. Okay. Unless you have $25,000 in your accounts. Now, say you're trading Thinkorswim with Schwab. Well, you don't actually need it in your Thinkorswim account. If you have the money in other Schwab accounts, that will facilitate that policy for Schwab. Okay. So, but you can trade as much as you want. We're not going to be in any hurry to do these. All right. Unlike the other 5 to 10,000 or whatever I did in the past, we seem to be very much in a hurry to do those. Not the case this time. We're going to simply follow the setups, and I'm going to be using scalps. If the setup does not present itself, I'm not going to force a trade. I don't want to force any trades, okay? The setup I'm particularly looking at is the 10 exponential moving average crossing the 20 exponential moving average on the 1 and 5 minute charts, preferably with the 15 on our side as well. Looking at chart patterns, I'm basically looking at a 5 minute chart. I trigger off the 1. I'm also going to review the news, anticipate longer term direction, okay? So I tend to want to, I'll tell you, I do have a bias to the upside on these, although sometimes I do go to the downside depending on what it is. I'm also going to buy time. I'm always going to buy time, unless, of course, a very quick short-term trend does present itself, and there's no ambiguity as to where this is going to go. All right, but I'm generally going to buy time. And the point of interest here is we're going to start with investing $5,000 per trade, at least to start. And then upon hitting the target, stop trading, done for the day, unless you're on a roll. Now, I know it sounds a little funny because it's like, well, here's the rule, unless you don't want to follow it. But you better have a very good reason for not following the rules. That's kind of what the general rule of the thumb is, right? I'm going to focus on calls, and if the market does tank, I'm going to generally wait for a reversal because I know for a fact, as sure as we're sitting here, that markets will find support. Just not really sure exactly where. We have a good idea as to where, but oftentimes they will break support. But if we do find support, I will wait for the reversal and try and trade to the upside. Markets gravitate naturally to the upside. And I said to my buddy John over there, I said, John, instead of 50,000, why stop there? I think it's feasible to hit $100,000 with the plan that we have. We have a plan. I'm going to show you the plan. And of course, rules may change as conditions change. Okay, rules can change as conditions change. Um, so let's take a look. I'm going to bring you the spreadsheet. So we have a spreadsheet, so we do this in the trading room, folks. We do this actually in the trading room. Okay, and those people in the trading room have access to this spreadsheet. So we started here January the 6th, $5,000. We're looking for a modest $200 a day gain, right? So we've got here the actual proceeds. There's our actual year-to-date balance. And our variance, we're up $164 because we made $364 that day. The next day we did not trade, put us down minus 36, and we kept going along with this. So the plan here is for the first 2 months we're going to invest $5,000, only going to seek $200 a trade a day. Sometimes, all right, we might even hold overnight. There's no rule that says we must relinquish control of this after the trading room or at the end of the day, nothing like that. If we see that this thing might break to the upside the next day and decide that, well, we're going to take the risk, we might just stay in there. And that's exactly what happened, for example, on this day here. Okay, the market gapped up and we made a lot of money. The following day, we made some more money. Then I didn't trade for a while. Once in a while, you have a loss. We had a loss here. For whatever reason, here is on January 24th, took a $33.65 loss. knocked us down a little bit. All right, but then we methodically came back up, picked up 23.40, got a little aggressive. Okay, a little aggressive here, and sort of taking modest gains here along the way. Remember, we're only doing $5,000 per trade, right? And then some days here, I took two trades. Actually, did a third as well, and I misspelled holding. Let me just see if I can correct this holding here. Oh, let me see. Let me go back into this thing. I should probably fix this at some point here. Okay. I don't like spelling mistakes, if you noticed. All right, I'm going to save this. Okay, there we go. All right, go back to this. And anyway, you can see how we moved up here. Here's another day I took a $2,000 loss on February the 11th. Cut losses short there, but I made up for it the next day, May 1996, and starting to edge a little bit higher. No trade on President's Day. And then in Las Vegas, when we were in Las Vegas there a couple weeks ago, did not trade. Did not trade the strategy. We were in the trading room, but I didn't trade the strategy. I didn't want to be bogged down with worrying about this because after the trading room, I had to get back on the floor, and so I just left that. Here's the day. I picked up three trades, 230, 410, and $200. No trade the next day. So you can see how in this trade here, I did 120 and plus 336. I went in for a third trade and lost 56. Still made $400 that day, 915. And on Friday, we picked up $204. I also put up a little bit of a graph here over on the right. So the red line is the actual numbers. The blue line is the budget. So we are well above the budget, folks. As a matter of fact, we're 35.99 over budget right now. That $5,000 is now worth 16,599. And if I don't trade between now and March the 14th, I will still be over my budget. So, and according to this methodology, so here's what we're doing. The first 2 months, we're trading $5,000. Now, starting tomorrow, we're going to be trading $6,000. So we're going to be investing $6,000 here for the next 2 months. Next 2 months into, right, into, what's this, May, I guess it would be, right? Right into May, end of April, $6,000. And instead of making $200, we're looking for $240 each trade. $240. And then we're moving up to $7,000 for the next 2 months. All right, that'll take us to the end of, what would that be? At the end of July, is it? End of June. So you can see what we're doing. Every 2 months, we ramp it up another $1,000, and we're only looking at, just getting a little more in our gains. From 280, when we're going to be at 7,000, we're going to be looking at 320 and at the $8,000 mark. And according to this model, if we continue moving it up, we should hit 82,840 by the end of December. Now, of course, being ahead of the game, we should probably hit $100,000, right? Not going to get greedy, just going to methodically move it up. So what we're doing by coming in low like this and just edging it up a little bit after 2 months is we're conditioning ourselves physically, mentally to, to take on more risk, take on more risk. Now we don't let the options go to zero, that's for sure. We may take a cut, but we're just gradually moving it up, and it actually gets a little bit easier as you're investing more money. So this is what we're doing, and we're doing this in the trading room live in front of a live audience. So if you want to get in on this, you can get in on this at any time. Don't feel that if you were to get in on us now that you missed a whole lot. You can start with $200. In fact, you can download your own spreadsheet when you're in the trading room and work your own $5,000 to $50,000 or $5,000 to 80 or $100,000, however you want to do it, on your own. All right, that's kind of the way it works. So that's what we're doing, and we'll probably give you an update on that every now and then, and just to let you know how we're doing. All right, so before we get into the questions, I want to tell you that we do have some pretty good services that we provide for you. And whether you want to learn how to fish or just be given a fish every day, we've got services that should ring your bell, right? Should ring your bell. One is the Day Trade Spy Signal, one of my favorites. This is an algorithm-based particular option that is sent to your cell phone 3 to 5 times a week if you're looking to make 5% a day. This thing is working exceptionally well. I think we're sitting around a 90, 91%, something like that. Don't quote me on that. success rate. And the way this works is it is algorithm based. It's in the mornings. You're not going to get this in the afternoons. And when you get the signal, you immediately buy it and then put it up for sale for a 5% profit target. Now, if it's not sold by the end of the day, you simply sell it at the market price at close. Okay. Now, we also teach you how to make a lot more than the 5%. You don't have to take 5%. A lot of people just simply put up for sale for a 5% profit target, but we got a lot of people who are also writing it up, right? It's just telling us that this thing is ready to pop or at some point during the day. So there's a lot of calculation that goes into this. But if you hold on to it and you ride it up, you can actually make a lot more. A lot of people are making a lot more than 5% on this. Okay. So this is called the Day Trade Spy Signal, our latest service. We started doing this about a year and 3 months ago, something like that. Now, you can go to our website and you'll get all the prices for this. But I'm going to give you a hint because those of you who are obviously on our Sunday night webinars, you're given this little bit of a break. And that is that if you just simply contact customer service at DayTradeSPY and ask them, what's your current special on the DayTradeSPY signal, I believe they will give you probably a better price than what you can get on the website. And that's what I recommend for all of our services. Go to the customer service at daytradespy.com. Email, right? Just email them. Next up, we have our pick of the day, which is kind of like the signal, but it's not. This one's a little bit different. What we do there is we send you a particular option, email to you at 9 o'clock in the morning. So what happens here now? This is not algorithm based. This is actually something that is discussed by John, my cohort in the trading room, and myself. Pre-market, we look at everything. We bring in together the news, the technicals, all of that stuff, various Twitter feeds. Sorry, X. I call it X now. Yeah, I still call it Twitter, and whatever else, right? Whatever else, and we pick a particular option that is of interest. We send that out. These are handpicked, designed to be bought at the market open, and you put up for sale for 6% profit target. Now, if you have to hold it overnight, you could, because they're also designed to have some time in them so that they're not going to expire the same day, nothing like that. So if you do have to hold overnight, it's probably not a bad idea. Most of these are also, um, we see the success very early on, most of them within a few minutes. So this is actually a pretty cool system as well. Pick of the day. A lot of people really enjoy this. In fact, a lot of people have all of our services. The signal, the pick of the day, and they have the inner circle, which gives you your morning market analysis. John, my cohort, has been writing these every morning, sending them out by 9 o'clock, and this is actually a flash assessment as to where he sees SPY go that day. Now, we are not smart enough to know where the market's going to be a year from now or a month from now or even a week, but we have a pretty good idea where it's going to go today. And this is what we do. It's just like a picture as to like a snapshot of what we see coming up in the next few hours in the market, which is pretty cool. And we are right, all, I would say just about every time. Okay. Um, and then you also get a follow-up report later in the day as to what we actually did trade, including all of our trading room trades, everything. Okay. And you're also going to be invited to our Wednesday night meetups where we can answer all of your questions. So if you have any questions at all about SPY or the market or the charts, we tend to use we use Schwab Thinkorswim. I was going to say TD Ameritrade, just out of habit, but it's Schwab Thinkorswim, and so that's where you can bring your questions. All right, and you're also going to get first notice of any upcoming events on those Wednesday night webinars. So again, we got a very special price for those. I'm not sure what the website listed for, but I think if you email customer service at DayTradeSPY and ask them for the pricing on the inner circle, you're going to get a very good price on that. Of course, our piece de resistance, is that how you say that? Our primary service is the trading room. This is hosted by yours truly, along with my cohort John, who's a very experienced trader. All right, he goes back 20 plus years teaching, having taught, oh my gosh, thousands and thousands and thousands of people through various publications. He's been published in many publications. He delves a little bit deeper than I do. I like to keep it simple. He'll look at other indicators than other than what I look at. And he's got his set of indicators. I've got my set of indicators. And when our indicators unite, our trades ignite. They explode, actually. And he's just a nice guy. He's also a lawyer. But don't hold that against him. He's actually a very nice guy. We always kid him about, we always tell our lawyer jokes. But this is where strategies come alive, folks. Every morning, 9:20 to 10:30 Eastern Time. We get together at 9:20. Now you'll hear a little bit of music in the back, before we start, starting at 9 o'clock. Make sure you log on early so that your audio works. Because we're not going to hold up the session to make sure, Joe Blow over there, test your speakers, turn up your volume, turn up your hearing aid, well, whatever, right? We don't get bogged down in that. Have you ever been in a webinar where they do that? They spend the first 20 minutes getting all their technical stuff on. We don't do that. We're going to start at about 9:20, right? We're going to start about 9:20, and we're going to talk about the news and the events that are going to shape up and shape the market. What's going on today? What's happening here? What should we be looking for? What did the pundits say? What did the Fed Reserve presidents say? Where are they going with interest rates, with inflation, and what's happening? How's the war in Ukraine or the war in Israel or the war wherever? How's that going to shape up? But our strategies come alive here. So we've got some pretty cool strategies, including our OMG, which is short for out of the morning gate. I love our scalping strategy. That's my favorite. And bread and butter strategy. This is where they come alive. This is what we do, all right? We discuss this. You can learn and earn, all right? You can follow us or you can just learn and earn and do your own thing. These are interactive. Again, you can punch up your questions. We're going to answer them for you. And it's actually exciting trading. And we have a lot of fun. We actually joke around. We do kid around. And that's what we do. All right. We do have a lot of fun. That's really what it's all about. All right. Having a good time trading. Okay. If you're only in it, I just want to make money. Just keep making me money. Just keep bringing it. Just keep churning out the winners. Like your money machine. I can feel like a money. There it is. Crank out the money machine. That's not it. We try to get three or four, maybe five trades a day, whatever we do, every day, make some money, right? And we teach you what we do. And I think that's the important thing. We want to teach you how to fish. Now, if after the trading room you want to go for it, knock yourself out. All right. And by the way, we actually not just being facetious here, but we love it when people take our training and they come back to us later and say, "Oh my gosh, you guys are unbelievable. You taught me how to fish. Thank you so much." We get those all the time, those testimonials all the time. We teach what we trade, and we trade what we teach. All right. That's what we do. You're going to get your questions answered in the trading room. All right. Live trading, we've been doing this since 2010. We kind of know what works in both trading and training. And it's just kind of a nice morning session. Sit back, have our coffee, and discuss this and other things and stuff. And yeah, we even tell a few jokes once in a while. So, but again, for the best pricing, contact customer service at daytradespy.com. Folks, I can tell you the price on this actually is $6.99 for 3 months. $6.99 for 3 months. My question to you is, can you afford not to subscribe to this? Because knowing what I know, I sure wish I had this program back when I was learning this stuff. This was actually this is an excellent price. I'm gonna tell you something. Before Eagle bought us out a couple years ago, we used to sell the trading room for $150 a week. A week, okay? And people were not only paying it, but they were thanking us. They were profusely thanking us for providing the service because they're making much, much more than what it was costing them. And then Eagle took us over and they said, well, we're going to get a lot of volume. We're going to ramp up the membership and cut the prices. Oh, no. But they know they're good. They're great about it. And I'm telling you, for $6.99 for a quarter, are you kidding me? Are you kidding me? 6.99. So what's that? $6.99. Divide that by 3 months. What is it? 4.33. Okay, so you're talking about $54 a week. Seriously, 10 bucks a day, maybe $11 a day. I'm not even sure that buys you a Subway sandwich and a drink every day for lunch. So don't miss out on this, folks. Seriously, this is serious. Where else can you get the advice and the mentorship of two professional traders every day at your fingertips? Um, I think that would be a really that's unbelievable. But that's what they do. All right, we're gonna get some questions up on the board here. All right, please share your recent SPY trade log. Okay, we did that and performance. Well, I did that on the $200 trade, Venkat. All right, I have my own personal log. I'm not sharing that tonight. I'll probably share that next week. We'll see what happens. Okay, is there a change? Is there a charge for the Wednesday night sessions, or is it like the Sunday night? Okay, so the Wednesday night sessions, that's part of the inner circle. All right, that is a subscription. So yes, there is a charge, but I'm telling you, it's nominal. I don't even think it's a cup of coffee a day. I don't know. I forgot now what they were selling it for at the trade show, but it was very inexpensive. I would recommend anybody who is starting out with us or with trading or trading options or trading SPY, listen, the subscription for the inner circle is a no-brainer. No-brainer at all. Everybody should be on that one. All right. All right. Next question. How long does a typical trading room session last? We go till 10:30. Sometimes we go a little bit over. And and does your typical trading end when the trading room completes? Okay, so now that's a good question. Does your typical trading end when the trading room completes? So we would like to be, our goal is to be in and out of our out of our trades when the trading room ends, but that doesn't always happen. But what we do is we actually discuss how we are going to end our trades. So in other words, we kind of predict where we see SPY going, and if we're feeling confident that, let's say we're going to the upside, right? And I see that this thing's going to continue to the upside. I'm staying in this call, and I'm going to get out of it. I will tell you what my exit's going to be, and I also tell you that, okay, if something horrible should happen and it reverses on me, I'm going to put in a stop at this level. So we're not going to leave you hanging with what we're looking to do. All right. It's not going to leave you hanging with what we're going to do. But by far, most of our trades are done by the time the trading room is done. In fact, most of our trades are done within a few minutes. Okay. Within a few minutes. So I think that's really important. All right. So next up, I don't see the link for the free newsletter on your. Okay, so go to the website daytradespy.com and just stay on the cover page there, the front page, for I don't know, a few minutes or whatever. Not a few minutes, but a few seconds or something. The pop-up should come. The pop-up should come. Now, if for some reason you don't have that, like you should, but you can also go to our website and get the newsletters. I'll show you how. Go to our website. Here's the website. Right here up at the top left where it says Spy in the Market, newsletters, click on newsletters. And then once we publish them, once we send them all out to the hundreds of thousands of people out there that are subscribers, then we post them here. So they do get posted, and you can get, I think it's like 70 some of these already. You can get, just keep going back, and these are interesting. They're, 2.5, 3 minute reads, and some of these are actually, well, they're all very good. They're all very good. And you'll find little snippets, little insights into my world, little insights into some of the people that have come through. We answer questions. I like this one, money to brains ratio. Uh, we have some pretty cool stuff here. So check them out, folks. And I know some people. This actually, you'll love this. Some people they like them so much. They actually went back and they downloaded them and they printed them and they put them in a binder. They put them in a binder, and one gentleman says, I've got a big 4-inch binder, and I'm in my second binder now. He loves them, and he's keeping these in his library. So I don't know. Okay, that's cool. Thank you so much for that. So yeah, actually they're interesting, and we enjoy writing them, and people enjoy reading them, and they're getting some pretty good traction out of them. So all right, okay. All right, now we got. I'm going through all these questions here. Wow, yeah, it's pretty clear to me Russia was the one that moved into Ukraine. I'll never forget that. And if you remember, Putin was lining up his men there at the border for some time, threatening, and then I remember that first shot hit a school or something, or kindergarten or something. I'm not sure how far back. I don't know what happened in 2014, but my question, why didn't you resolve it then? Anyway, whatever. Anyway, let's go, Brandon. Johnny, my boy. Johnny, my boy. Okay. Uh, so Trump did say something that really rung my bell that day, the other day. He did say, look you're flirting with World War III. You are flirting with World War III. So I think he's got a point. This has got to come to an end. It's got to come to an end. And it's just, anyway. So I was kind of on side there with him on that one. So figure it out. And I kind of like Trump's plan. We're going to go in for that rare earth because we gave you all that money, right? Give you all that money here so you can repay us, Ukraine. Give us your rare earth, which is good because guess what? It's going to put American boots on the ground. And by the way, American companies are all over the world, all right, doing things, all right? That's not unusual. So if there are American boots on the ground in Ukraine, getting this rare earth, that means Russia's not going to invade Ukraine, right? They're not gonna, uh, be aggressive towards Americans because they know what's in store there. So I think personally that's a great idea. Anyway, all right, State of the Union is that Tuesday night, not Monday night. I'm getting is that Monday night or Tuesday? So I'm getting some comments here that's actually Tuesday night. Uh, I thought that was Monday. Let me think here. Monday. Let me take a look at my, let me get the update on that. You're seeing that on Tuesday night? Hang on a second. I thought I had that. Let's see. When, I'm just getting confirmation. When is the state of the, I want to make sure we have this right, okay? Union address. Is it Monday or Tuesday? Uh, all right, according to, hang on a second, 2025. I thought it was Monday, March the 4th. It is Tuesday, folks. It is Tuesday. So for that, okay, it is Tuesday. I am going to revise my my thingy here to show that that is actually on Tuesday. Let's go back. Okay, so we have to stop this and go back to Tuesday. Tuesday. I want to make sure that I get this right. Okay. So this is not going to be on Monday. This is actually going to be Tuesday. All right. Low new news. Okay, so Trump, I'll just write Trump address, okay? Trump address. All right. There it is right there. Tuesday. All right. Just for the record. Okay, let's move along here. Let's move along here. Some questions. We did this one. Day trade spy signal, pick of the day, inner circle, trading room. Okay, and there's the questions right there. All right, let's move on with some questions. Thank you for the update on that, guys and gals. I love you guys. You know that you're if I make a mistake, you're very quick on correcting me, which is what I actually like. I like to be accurate with everything I say here. Okay, so I've got a little comment here. An agreement was signed that agreed Ukraine would not be allowed to NATO requirement of Russia. Then the West started pushing the concept of allowing Ukraine into NATO. That will be a requirement in any peace agreement. No NATO for Ukraine. So I think that's yeah, yeah. I know there's an issue there. So, but could they not have sort of resolved it a little more amicably? I'm thinking to myself, I don't know. Economically, perhaps. I don't know. Anyway. All right, next question here. Tuesday night. Can you recommend which service is better, pick of the day or signal service with a full-time job? Okay, so full-time job, if you are available to be, okay, so they're both excellent programs. They both have excellent results. I like the signal. Now that does come 3 to 5 times a week, and it could be could trigger at 9:40, could trigger at 9:58, it could trigger at 10:30, could trigger any time in the morning. It does not trigger in the afternoon. Okay. So if you're, say, in a job where you're not at a computer at 9:30 in the morning, the signal would be ideal, be a little more flexible that way, and it goes to your cell phone, so it goes right away. Okay, right away. The pick goes to your inbox at 9 o'clock in the morning, designed to be traded at 9:30. So, who wrote that? Harris. So depending on your job, how you could do that, I like them both, and a lot of people actually have both, and I believe they are priced the same. So they are good. The pick may actually go into the next day, but the signal is designed to be traded in and out the same day. Okay. All right. Okay. Some of the comments here. Okay. Okay. Let me see. I'm just kind of going through some of these questions here. I'm trying to go through what is your daily target for the 5 to 50K? Right now, Brian, it's actually, I think it's going to be $240 a day now, starting tomorrow. I think we're up to $240 a day. Let me just bring that up. Yes, 240. Starting tomorrow, we're looking at $240 a day. Okay. That's going to be for the next 2 months. Okay, question here. Do you hold off on pulling the trigger if your setup is good but fundamental news is near? Good question. So, if there's fundamental news coming out that might move the market against me, I tend to be very careful about pulling the trigger. Okay, I tend to try and pull off trigger, but I look at everything, and I weigh the how much weight is the fundamental going to be versus the technicals. Sometimes you get some really good technical setups that even if the fundamental goes against you, you know that it's going to maybe, let's say you're going to the upside, you got a really nice cup, and if the news is going to be good for your stock, it's going to continue going up. But even if it's going to be bad, it might come down and give you a cup and handle or maybe a double bottom. But you got some very strong supports. You're not worried about it. You're not worried about holding it. So there's a lot of things that go into it. All right. The trading plan, are you setting up these trades in the trading room? The answer is yes. These are all discussed, narrated in the trading room. And they were all made during the trade. They're all made during the trade. They're all made in the trading room. Now, we may have held over after the trading room, say, and maybe got out of it 11:15 or something. But again, we discussed those. So. What's the expiration of the options used in the 5 to 50K? Generally, we are using expirations Mondays and Tuesdays as a rule. Okay, we could break that, but as a rule, we've been using on Mondays and Tuesdays that same week Friday's expirations. Then on Wednesday, Thursday, and Friday, we're using the following Friday's expirations. So, is the lifetime subscription still available, Bruce? I would contact customer service at DayTradeSPY and ask them. And if you're not getting any results from them about that, email me, all right, hughg@daytradespy.com, and I will refer you to somebody else and find out about that. So uh, you should probably be able. I'm not sure they promote that certain times of the year, but if you're looking to get it, I might be able to pull some strings on that with the Eagle people on that. Okay, so question is, Aaron, you still your partner? No. No, Aaron is not on our line anymore. He has gone on to other things. So he is not. He has been replaced by John Johnson, who was a former. Well, he still is. He was actually a former Eagle guru, but he retired, and he would send out newsletters. And but now he is with us in the trading room. Super nice guy. I love him. What is the difference in pricing from the pick of the day and the day trade spy signal? I believe, Claude, the pricing is actually the same. So you might want to get both of those. So, okay. And let me just see what other questions are. So here's a question. Um, okay. So I had this question posed to me the other day. You're so successful. Can you show me your balance sheet? Your personal balance sheet. I said, I'll show you my balance sheet on Sunday night. Are you going to be online? Let me see. Where is this lady here? There's a lady. Who was it? I'm trying to think of where is she? Her name is Roshan. Is Roshan on? Roshan, where are you? Lovely lady. I met her. Maybe I'll talk to you about her in a little bit at some point. Okay, Roshan, I'm going to show you my balance sheet. Let me add, do you guys want to see my balance sheet? I don't want to show you if you don't want to see it. Okay, first of all, let me just see. Okay, yes. Okay. Okay, here's another question. Why can't we register for the trading room if we are paid up? I'm not sure, Robert. What do you mean you can't register? If you are paid up, you should have the links by now for this week. They were sent out earlier this afternoon. If you don't have them, let me know, and I'll certainly send them out to you. Okay, yes, yes, please. Okay, I'm gonna show you my balance sheet. Here's my balance sheet. I'm the guy that I have to block out their faces for privacy reasons, but here's a family photo. Uh, there I am over on the right side in the middle. That young lady in front of me, she's our favorite. She's our favorite. This one, two to the left, she's also our favorite. Uh, that's my balance sheet, folks. Keeps me in balance, right? Keeps me in balance. That's what I live for. All right. My family. All right. My family is everything to me, and that's what we do. So, all right. With that said, folks, thanks for joining us here. It's been a real pleasure. I'll get the recording on a little bit, and we'll see you tomorrow morning in the trading room, 9:20 Eastern.
Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing, you can have